Santolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on September 5th. So it's been an interesting but another kind of jagged week, at least as I record this, is, we came in really starting last Friday before Labor Day into this Tuesday with, the lagging growth stocks got hit, but the whole market got hit, tested its, 50-day, 10-week moving averages for the most part, and then bounced even into today where the market opened higher and people think there's going to be rate cuts. And then there's just been a huge volume sort of reversal. Now, I'm not saying that as saying, oh, this is a top, we're going to go straight down, or saying it's a fake out. My main point is it just remains very tricky out there. There's a lot of cross currents. There's rotation. Sometimes there's re-rotation. There's selling on strength for sure. And there's some buying on weakness. Although I would say as time goes on, we're seeing, I'm not seeing a spade of massive amount of breakdowns. If so, I'd say, hey, you got to be defensive here. But we're seeing kind of more things either stagnate or lose some intermediate term support compared to things sort of breaking out on the upside, okay? So overall, I really haven't changed my stance. As a growth investor in Cabot Growth Investors model portfolio, we're about half in cash. Maybe if you own some other things, if your scope's a little bit wider, maybe you're not that much in cash. But either way, I would stay somewhat within sight of shore, just because, again, usually after an elongated run with a lot of cross currents, we've seen 3 market wobbles. We've seen, I don't even know how many bouts of rotation at this point, sort of out of growth into the broad market, sometimes back, then back again. It's tricky to sort of make money and keep money here. So I wouldn't just be forcing the issue, and I certainly wouldn't be over trading either. Over time, I definitely think growth stocks and a lot of these names are going to go higher. It just seems right now, things are a little bit, out of gear, obviously, with growth and the rest of the market. And, again, it's been a 4.5 month run since the lows. You're going to get some of these cross currents, and eventually they'll take care of themselves. It could be through a September-October correction. It could be just through some more chopping around, then things kick into gear. Hopefully it starts next Monday and we all make a ton of money here into year end. But until I see it happen, I would at least, like I said, stay within sight of shore, have some cash, take some partial profits on the way up, raise your stops. I wouldn't be in there every day, freaking out about every move. Give some things some room to wiggle around. But I also wouldn't be flooring the accelerator here until we see things kind of get more in gear on the upside. Okay, let's hop into the charts as usual. I'm using a product called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. As always with the indexes, so this is the third. This week, starting last Friday, was kind of the third, I'm going to say wobble. It wasn't a huge, correction, obviously, in the market. It's nothing like this. But it was, kind of 3% on the S&P, maybe 3 or 4 on the NASDAQ, that sort of thing, which is noticeable, but not obviously crushing. And we found support so far above the 50-day line. We tested it this week and bounced. Today, though, we're, I'm recording this late Friday morning. Maybe we finish down 3%, maybe we finish up, maybe, whatever. But we are kind of reversing in here. Overall, the intermediate term trend remains up for this and everything else, really, which is the good news. S&P 500, same sort of action, but above the 50-day line. And the broader indexes actually look better, still seeing selling today. But overall intermediate term trend up. This is the mid caps, New York Composite. Okay, so it's just more tricky than anything. It's not so much negative. It's not negative at all yet. It's just trickier. Another thing that's, just a small, it's tertiary, but we'll see what it is. It's just, here's the Dow up here hitting new highs recently. It hit a new high here, kind of tagged a new high here. The NASDAQ has just been lagging a little bit behind that. You can just see the relative strength. Excuse me, this is to the S&P 500, but it topped out here in early August. That's kind of jives with what we've seen with a lot of growth stocks, okay? And same thing, we go through this every week, but this is like the momentum fund. Again, we'll see where we end up today. Maybe today ends up being decisive and we're down here. Maybe it's the final shakeout and then we rally. We'll just have to see how it plays out. But my bigger thought right now is, no net progress and a lot of ups and downs since early July, really since the start of July. This is the equal weight QQQ, the NASDAQ 100 equal weight. You can kind of see same sort of pattern. So growth in particular, but even a lot of the market is just getting trickier, and you've probably seen it in your own accounts. Yes, like, top 10, we've actually hit on some things, but we're still okay taking, maybe we take some profits if we're up 10 or 15%, just a little bit of profit. If something looks okay but not great, maybe we throw that out, just take the profit. And meanwhile, there's still a lot of things that are kind of churning left, right, and center, okay? Now, I would say I think it's good news. We'll see if it plays out. This is the 10-year note yield. The jobs report this morning, not so good, I guess. And so interest rates are really coming in. There's really some expectations now cementing that there's going to be some Fed rate cuts. Is that a good thing? Is it going to be a recession? Is it going to be rate cut? In general, lower rates are positive. So I would just say, we're down to levels that hasn't been seen since the April panic. And really before that, since October of last year. So I view that as a positive. I mean, it's a background positive. Eventually it will be positive. But if you see the 10-year note keep coming in, the Fed cutting rates, that's a good thing. The other thing too is despite, economic data and stagflation, inflation, all these different cross currents again, XLP is not doing anything. This is consumer staples. There's no rush in defensive stocks. That could change. I mean, maybe we come in here and, again, it's a September, October slide and people pile into defensive stocks, but there really hasn't been anything going on there. Even the utility stocks, which you'd think are interest rate sensitive, of course, they had a pretty good run, but even they've come through here. I'm not saying this is some major downtrend, but they've been softening of late, even as the market's kind of had some more issues in the past month, more cross currents. So we'll see how it goes. Right now, I would just say it's positive, but it's certainly not powerful, and it's just tricky out there. So sometimes it's like walking outside. One investor used to say, sometimes, you walk outside, it's raining, you can't help but get wet. It's like that in the market. You can't help but make money if you have some idea what you're doing because you're just picking good stocks that are going up. But right now is a little bit, obviously not one of those times where there's just a lot of things go up for a couple of weeks, then they come out of favor, and there's rotation, and there's this new news-driven headline, so on and so forth, okay? Another thing, this is to me individual stocks. This is not, I'm not saying anything like definitive about these stocks. I'm just using these as examples of what I'm seeing out there, beyond what the NASDAQ or the S&P is doing. This is Snowflake, which we owned it back here. This is one of these many stocks that, broke out on earnings. Yes, it was kind of straight up from the bottom. So, some rest would have been normal. And it did kind of rest in here, kind of chopped around. But then instead of sort of following through on the upside because the sales and earnings and the story's good and the market's good, the stock breaks down. But does it collapse? No, then it gaps up on earnings, but then, since it gapped up on earnings, it's gone down, 30 points or whatever. So it's just that type of, if you held this thing for the last 3 months, there's been a lot of ups, a lot of downs, but not a lot of progress, okay? NVIDIA, I just wanted to mention, had a great run. So first of all, many weeks up in a row. This is the weekly chart, nice breakout, nice run. And so I'm not saying, long term, this is any big thing, but just right now, this second, again, stalling out here really since, in this case, sort of mid to late July. And now we've seen kind of a little bit of a volume cluster before and after earnings on the downside, breaking the 50-day line. Just seeing more and more of that type of action. I'm not saying that means we're going down here. Maybe it's a good buy here. It's not my way of doing that. But you're in some sort of intermediate term correction, consolidation, whatever the term you want to use is. Okay, stuff like that. Garden Health, which, we wrote up yesterday in Cabot Growth Investor Thursday as a potential setup. We've been watching this forever. I've mentioned it on this video a while, and it finally broke out here. Of course, medicals are always a little news driven, but finally broke out, very persistent advance, and then they release a clinical trial, and boom. Now it's not broken, it's to the 25-day line. It could be, one of my thoughts here is maybe if this gets going, it's a nice shakeout buy. It's not broken at all at this point, but that's the type of chop you're dealing with where, if you bought it perfectly and you wrote it up and back down, you're up, I guess you'd still be up about 10%. But the point is it's hard to make and keep the money. It's kind of easy come, easy go, at least for now, okay? Now, with that said, there are still a lot of stocks that are acting right, both some fresher growth things and some broader, what I'm just calling broader market things. So we'll see how it goes, all right? In the medical field, which I've always hoped would get going, and it's been a long wait and it didn't really get going this year. But there are some names emerging. GH was one that hit a pothole. We'll see how that works out. But in the biotech field, this is ALNY. I've mentioned it before. It's been up and down for a while. Typical biotech, it's got these moves. But it looks like they're finally going to crank out money this year and next year. They just turned profitable in the last quarter. I don't know if you can see that. 32 cents a share. Big liquid stock, 1,800 funds own it. And now you just have this nice tight area. Maybe it's too tight. Maybe it needs more of a wobble to shake some people out. But so far, certainly very, very tight in here as the 25-day line is caught up. Old friend ARGX, not quite out to a new, well, no, I guess today it's testing RP peaks, but kind of has had this, good, not great advance here last year. And then this big 6-month base. And then it, after the earnings gap, back to the daily chart, again, gapped up, wobbled, but it's been nice up here. Probably it's usually not a runaway stock, but maybe it pulls back again. But overall, that looks pretty good. BridgeBio, BBIO, this was in top 10. It kind of has a similar catalyst as ALNY, I guess I would say. So just keep that in the back of your mind. But anyway, BBIO, big, huge consolidation in here. Nice breakout, 2.5 months ago. And it's not the most powerful thing of all time, but certainly, nice uptrend going on here, outperforming the market. So it'd be nice if more medicals and biotechs. I think there's a lot of good stories there that can be leading groups, leading stocks, but we'll see if the group can kind of continue. Just sort of other names, Reddit, I keep mentioning. It's still, my guess is there might be another little short-term reverberation from this sort of sharp pullback here. But when you just look at the weekly chart, it's a little wild and woolly, but it did have this nice breakout, nice 3-week run. And so far, this consolidation last 3 weeks, it's a volatile stock, but it looks pretty normal so far. Astera Labs, ALAB, again, you're getting a reversal here, so we'll see how things clear up as the day goes on and next week, really. Okay, but I would just say that A, it's a recent issue. B, the numbers are nuts. It's an AI infrastructure play. Big sales, big earnings. Seems like they have a unique positioning. And then after this tight area, not only did the stock double, which is unusual, but it doubled. It had 3 straight weeks, kind of a 3-week volume cluster, so to speak, almost like the opposite of what, NVIDIA had a little bit of a volume cluster on the downside, just near term. Now we're seeing a weekly volume cluster on the upside. And although it's, reversing today and day to day in the news, but, on the weekly chart, don't get me wrong, this is a 20% range from high to low, 200 to 160. But, it's holding its gains very, very well. So, the general rule is the longer these things that go nuts and then they consolidate, the longer they can consolidate, the greater the chance, not 100% chance, that they can, follow through on the upside. So I do find that pretty interesting and encouraging, assuming it can kind of hold together here near term. Corning, which is kind of a slower, steadier play, a fresher name in the AI, sort of the infrastructure space, but nice breakout just maybe 6 weeks ago. I'm not going to count the weeks. You can see it continues to act well today. Good volume this week too. A lot of these things kind of dipped like the market did on Tuesday, I guess, after Labor Day, found support near the 25-day line. And then while I mentioned Snowflake and some others, especially in the past month, there's been a lot of earnings gaps that just kind of there's been very few earnings gaps that really followed through on the upside. Some of them pulled back normally, like ARGX. Some of them kind of gave it all up, but very few have really hung in there. But what's interesting is last week we did see MDB gap. There is old overhead here. The numbers are good. I wouldn't say they're amazing, but the volume here was, I think the stock's certainly one of the biggest ever in many years. And so far, even though we've had these wobbles and reversal today and all this stuff, very, very tight in here. Pure Storage, PSTG, I think, yes. Again, kind of one of these out of this world volume days. Now it's just one day. I almost like to see those volume clusters, but again, holding in here very, very tight just for a few days so far, which is a good sign, okay? Outside of sort of pure growth, WYNN looks like it's turned the corner. This is WYNN Resorts. The casinos, when they move, they tend to, they're bigger companies now, but when they can trend. They can definitely trend, even if it's not for, a year. When you get a good trend here, you can move for quite a while. And this is a nice, big bottoming base. And it just has really, you can just go back here, not to go on a tangent, but, again, you get strength and it sells into, you kind of get strength, it gets crushed. Obviously, here was the top. It got hit hard for a few months. But you can just see kind of now since the low, it's changed character. It's, yes, it pulls back or consolidates, but it's kind of 3 steps forward, 1 step back sort of thing. Nice volume on the upside last week, pulling back this week, but you can see so far it's a holiday, it's a 4-day week, but still very, very low volume in there. Housing stuff looks good. This is DR Horton. I mean, full disclosure, we said, take a few partial profits in top 10 this morning in our update. So I'm not saying it can't pull back, but overall, I do think some of these things can continue to recover as the Fed cuts rates and stuff. It might be a little bit obvious here. Everyone now thinks the Fed's going to cut rates, so maybe it could be a sell the news event, but either way, it looks pretty good. Rocket Mortgage or Rocket Companies, they have a few different things going on here too with some acquisitions. It's kind of an interesting story, and you can see on the weekly chart, it's volatile. Like every week, the stock's moving up and down 10% sort of thing, but again, kind of tested that 10-week line this week and found support, okay? And last but not least is oil stocks. We'll see what happens. Oil prices, this is the USO fund, which is not, it's not exact, but you can see oil prices on, the last 3 days have really faded, so we'll see how it goes. But just kind of, I still keep an eye on this. This is called Technic FMC. They were formed from a merger. The symbol is FTI. And so oil stocks have been like this forever. They might have been bottoming out here since April, but very, very few, if any, outside of maybe some pipelines, are hitting new all-time highs like FTI is. Okay, and I actually found this week some very good buying volume on, I think that was Wednesday and Thursday. Okay, so do with that what you will. So overall, it's not hard to find things that are working. It's just hard to find things that are working consistently, I think, is probably the bigger point, where you're seeing, shakeouts and then a recovery, and then another shakeout, then a recovery, and then some selling on strength, and then who knows where we close today. So I'm not saying go out and sell all your stocks. I'm also obviously not saying go out and buy a bunch of stocks. I think right now it's probably more, pick your spots carefully, make sure you're paying attention to your portfolio, raising your stops, maybe some partial profits, that sort of thing. And on the buy side, like I said, pick your spots. But let's just see if we can kind of get more stocks in more of a consistent uptrend, and doing the 2 or 3 steps forward, 1 step back, as opposed to up, down, and all around with news-driven action. Okay, leaning bullish overall because most of the evidence is bullish. I don't want to sound too cautious, but there's certainly been a lot of potholes and air pockets among growth and elsewhere. So just make sure you're keeping to the rules and keeping your feet on the ground. Okay, that's all the time I have for today. Thanks for watching, and be sure to come by again next week for another Cabot Weekly Review.